Hello, this is Oliver and welcome to my very personal finance channel. As you can see from our investments here, we've finally managed to cross the £5,000 invested threshold. We did it last month, but it was only just, so now I'm considering this properly achieved. We've also managed to cross the £1,000 profit threshold, or £1,000 return should I sell. Again, we sort of peaked a bit last month, but this, I think with it being 1,100, is solidly over the line. So we're making some really good progress here. 20% on 5 grand. I mean, if it stays at 20%, then it'll be 20% on 10 grand soon enough, and then 20% on 15, and then 20, and yeah, I can really see this starting to fly. So there's not been too many purchases this month. I've only really bought Aviva, where I've bought another 45 shares, giving us a total holding of 100 Aviva shares at an average of £3.15 per share. £3.15. With Aviva's current dividend of 21 pence for the year, that gives us a return of 6.6% at this current average. Now I am expecting Aviva to drop shortly, which will be nice. Hopefully they'll drop quite a bit and we can pick up a few more shares at a relatively decent price. But as you can see from the line where we've bought in, it's still relatively low, so I'm happy with that purchase. My second purchase this month was actually a 5-ounce Scottsdale bar of silver. Now, with the rapid increase of my investments this month, there's been a lot of, I don't know if it's just me, but I've been seeing a lot of inflation news, and it might just be that I'm targeted by various algorithms because that's what I'm interested in. But the amount of inflation news I'm seeing, it doesn't look very good at all. Everything's sort of spiking, which means things become more expensive and money becomes worth less, which means it costs more money to buy the same amount of things. And with that in mind, I have bought some physical silver because in a high inflation economy, it's better to hold the thing than it is to hold the cash. So that's what I've gone for, which is actually my roots and what really got me into finance, economics, and investing. And moving on to the dividends for this month, as you can see, that's where we bought Aviva 45 for £186.24. Dividend wise, Lloyd's finally paid the dividend. God, we've only been waiting a year for it, but they've been basically told that they can only pay sort of 0.57 of a penny per share. As you can see here, that'd be, if that was a 1, that'd be 1 pence per share. As it stands, it's 0.57 of a penny. Now, fortunately for us, we purchased when nobody else was buying. Lloyd's crashed horrifically, and we started buying at about 30 pence per share. They're now up to 50 pence per share, and I think the moral of the story is buy when everyone's scared of buying, because it's going back that way anyway. Anyway, as I said, so £9.69 from them, very good dividend. Aviva paid us £7.70. Now, the amount of shares I got was only for 55 because I hadn't yet purchased my other 45. So the next time they pay a dividend, which I think they're moving to quarterly now, the next time they pay a dividend, we should get the full 100 shares worth, so that'll be good. And then we've got, oh, sorry, yeah, we're in May. We've got AG&C Investment, which paid us £5.77. Got a bit confused there. And all in all, that brings us to about £23 for the month, which is fantastic. And with investing £200 a month, you know, it's 10% extra on our investing, which is an excellent return. And with that in mind, I have put those into my spreadsheet. So as you can see, £23.16 for the month of May. I've put an average line here so that I can see where my average sits. As I said, I think in the last video, I'm after an average of £10 per month for this year, and so far we're doing really well. We're actually £15.15, so we're over our target by 50%, which is fantastic. Quite like the bar graph because I can clearly see what months I'm falling short on, and then I can change my investing to target those months, which I think will end up with a quite a steady and even income. And just on the topic of inflation, it's got me thinking about Andrew Craig's book, How to Own the World, which, if you've not read, is a fantastic read and it will change the way that you look at money. Well worth a read, even if you just download Audible and get it for free. Um, just listen to it in the car, driving to work. It's fantastic. It will change the way you think about money. One of the exercises he suggests is to see the depreciation of currency. Change your money to dollars. So you take the amount of dollars at the time and then the amount of dollars today and work out the difference. So that's what I've done. So in 2015, my house was purchased for £121,500. That converted into dollars with the exchange rate at the time turns into $187,583.85, which I suppose, well, we'll round up to $187,584 just for the sake of convenience. My house, when I purchased it in 2020, was £135,000, which with the current exchange rate of $1.41.3 is $190,755. So there's not really a big difference there. So just working out the percentage of that, the people who we bought off saw an 11% increase in pounds, but if you were to convert it to dollars, it's only a 1.69% increase. So that just goes to show that the pound is weakening. The pound can buy less stuff, and I think that's really important to take into account, especially when you're looking at especially big purchases like houses and things like that. And when people say, oh, inflation doesn't really make that much of a difference, clearly it's made a massive difference. If I were to tell you, oh, well, your house has gone up 2% a year every year for the past 5 years, you'd be relatively happy with that. You know, you're making 11%, you're happy. It's not too bad. But if I were to tell you, oh, your house is going up, 0.3% every year for 5 years, you'd be gutted. Anyway, so that's just a bit of a diversion that I've done, and I think it adequately shows the fact that the pound is in fact depreciating, no matter what the banks or the statistics or the government say. It's just one of those things. It's going to happen, and about the only thing you can do is prepare yourself for it. And I think forewarned is forearmed, and that's all from me. I'll upload again next month. See ya.